Hey everyone, sorry, I don't know why. I just couldn't stop sneezing when I turned on the stream. Okay, so silver was a pretty easy trade, but I do think that this one could get a relatively decent move into the close. I just want to see if it closes over half that range, especially since it cleared that 103.27, 102.98 spots. Like these are really calculated areas for this one. So I figure that it can still keep heading on its way to that 139 mark. I don't think it would get there like immediately right off that first break, but I figured even off these ranges here, like there's definitely some overhead close to like 127. I don't know if you guys can see this. Can you guys see this here? Let me just delete these. Off this area here. Do you see that? So there should be some overhead around 120, basically 121. And then off these open closing ranges here from like right back here on December 26th and 29th. Those were like the highest open close into 20. It should be like pretty close to here. So what is that? 20, 79.25? 79.25. It did break that. I don't know if you guys can see. Like off this range here, it definitely did take out that spot. Do you see that? Like right here. Like pretty close to like this area in here. There's definitely some overhead. So it would make sense that that's where they'd probably sell it off right here on silver. But I did like this one into the close, so maybe something worth watching as we head into the second part of the week. Gold ended up clearing that that 50.24 mark. And we did talk about some overhead around that 5100 area. We talked about it a few weeks ago, but essentially this is still on its way to get to that 5491, especially on this clearance break. So, and there's a lot of support close to 4903, 4915 area. And if you guys saw this morning, you see how it held right into the close on Friday, and then overnight it held these spots super nicely. I'm gonna copy paste this to show it to you guys. So gold is actually holding off these areas pretty good, and I noticed that the differential between where it stalled and the range in terms of like where it breached, they're not too far off, but I wanted to mark that because this could be the area that it could trigger when it breaks. And it's a little bit harder to see with it like that, but remember how we said it had to break on the 22nd? These are the same idea. Like if you're looking off that December 26th, do you guys see this? Like how we just looked at silver? Except gold moves in about 587 point intervals. Are you guys listening? So what are these spots here? 4,000. Let's mark them in yellow. 4,532. Might be a little bit hard to get exact, but do you see that? Kind of like right here. So 5,121. These are calculated spots on gold. You can mark the exact spots if you want off the highest open, highest close for the year. Okay, but kind of like off 4,549, basically 50. It's basically between that 5121, 5136. I don't know if you guys can see this. And then off the highest range, which is off that 4550 spot, like close to here. It's just beneath that 5139, kind of like right around here. Okay, so I would expect there to be a lot of overhead right around this like area here. I don't know if you guys can see that. And that was actually the range differential too. You see that 5129, like the 17 points here. So gold is not going to clear any higher until it gets past this really, really big spot, because this is the same thing as essentially clearing 2026 highs. Does that make sense to you guys? Because these are the increments that gold is moving in. So gold definitely needs some massive structure breaks above basically 5,140. And then as for ES was pretty straightforward last night. We looked at this and we knew that we had to basically sustain off these core ranges. I drew it last night for you guys, but the first spot that we said we had to break to was 69.32, which they did on a sustainment above 6.878, 6.871. We didn't really want to go lower than these ranges here, especially since these were the sustainment of core ranges when we talked about them. And when we looked at it off of Friday's close, this is basically a 55-point hold. So we figured on the inverse, if they did something similar, they could basically take it to the zone, which is exactly what they did. Okay, and that's kind of why they're stalling in this area here. And then I did mention that the max range we could get is maybe if they hit like a 64 to 66 point ratio, and that's why they could cap it close to 7,000. If they did a core to core range, those are usually 25, 50, 75. In that event, that's how they can get like 70.07, 70.09. Off the actual opening range and where they gapped us down, it wasn't too much downside. It was close to 25 points. So kind of the same ratios if you're seeing that trend, 25, 55, so on and so forth. So they still could trigger those areas, but it would probably depend on where they take it to into the last 10 minutes of the close, which we'll watch closely here. Off the actual opening range though, these were the 22-point intervals, which is why we really needed a quick retrace of 69.26 like we talked about last night. Okay, like these ranges here. And if you notice too, overnight, like this was a really good structure break. And then they took it to the channel, which we said we needed to do in order to get some progression. So the way that I drew this last night was the 3-2, and then we had the back test down to the 20s, and then a break to 4.849, which they did a really good job of doing that during London session here. And if you paid attention to last night, they did a good job of holding the bull zone. Do you guys see this here? Like this hold of 69.21? This was a really, really, really good bull structural hold. So this implied that not only can they take it to the zone, but there could be some odds of either core areas or core ratios in play. And the reason I say that is because these areas here, like 79 points, do you see that? Those are core areas. If they trigger those as early as overnight, which they did right here, like, do you see this? They broke 66-point ranges, 68-point ranges here. So they already had very good odds of clearing core ranges off the open, which is what they did. Core areas would be like the white spots here. So 6-9, 6-8, 6-9-7-1. They opened at 6-9-5-5, not quite a core range, but or 5-7, but they still were able to clear it within the first 5 minutes. So I don't know if you guys saw that. I do think if they would have cleared with within the opening range, like, so let's say they had opened us above 6-9, 6-6 at a minimum, I think we could have had maybe like an 8.5-point differential. Remember how we had that 8.5-point differential last week? I talked about it on Friday's stream. Here it is showing up again. It's not that 5-7, 5-8 is bad. It's still above our 5-3, 5-2 area, which is okay. And that was the first overhead that we talked about last night. If you guys remember, this is what we said. We said that we're going to watch this if we hold and retrace. And then after that structure break, then we look for bull continuation. This was the plan. This is what I literally sent you guys last night. So this ended up playing out so nicely. And we said that it's going to invalidate if they lose 6-9-3-2 and then fail to reclaim. So failing to reclaim means like failing to hold off 69-24 and reclaiming 3-2 last night, okay? Which you can see here when they broke it down, they immediately took it right back up. So this was and another thing that offset this risk is they triggered 50 before backtesting 2-1. This here helped mitigate some of this risk. Does that make sense to you guys? Like this right here, there's that 3.5, 3.25. Do you see it? Like above 4.8, 4.9. Let me just show you guys. Like this right here. Take it off like 4.8. Do you see that 2.25 range differential here? Okay. Like this can really help you in terms of like, remember how we said 2.4, 0.25, 2.5? These are some really crucial areas for ES. Okay, and we said that the main areas that we really, really, really need to sustain, and we talked about it last week. I'll copy paste it here. This was 69-24.25, that 2.75. So you can kind of see it coming into play again. And that was the calculated spot. It's close to 2.4. Okay, so I think the only reason why it was okay that they went to 2-1 is because they broke above right here. I feel like if they hadn't broken above, then I would have preferred that they would have held closer to 2.4. Even though 2-1 is still technically a bull zone. Does that make sense? And then they had that immediate reclaim. Yes, remember how I said this on the stream Friday? You could have still basically held 2-1 and still be considered safe because it's a bull zone, okay? So we talked about that on Friday. So this is basically what ended up happening last night. Is 6-9-2-1, 6-9-2-2 is still relatively safe, and it's because of this, okay? So this right here. Just so you guys have. And then they took it back and they did exactly what we wanted them to do, which was clear this area here, try getting into core areas. I do think that there were some reductions though, so we can start with a minimum of like 8.25. The most ideal area that they would have opened at today, in my opinion, would have been closer to like 7.1, 7.2. So had they opened there, I think this would have been like close to like that 13-point offset that we've been talking about. So let me just show you guys this, because we've been talking about the 8.5, 13 points quite a lot. Okay, let's just start with the 8.5 first, like if they had opened above 6.6. And since we had calculated odds around 89 and 90. You see how there could be some major overhead around the 99 spot right here, like pretty close to here. If we measure it right off the zone, which is the 87, 88 spots, and 87 is extremely calculated. That's the 173 point range we talked about in the report. Do you guys see how there's a ton of overhead near 96? Can you guys confirm this? So I'm not just like talking. Okay, so I would say that this area here, like above 87, 88, where the zone starts, 95, 96, there's going to be a ton of overhead in this area here. Okay, and it's mostly because of where they opened. I feel like had they opened just a tiny bit higher, then we could have had the odds of this, okay, like 70.04. If they had opened even higher than that, then they could have had those odds of like the 13-point offsets close to like 708, 709. Which is kind of what ended up making this more pinnable between the 87 and 9596 spot. So far the high hit 9550, which is, this is extremely calculated. Do you see that? 8.5. Oh, that is exactly 8.5 off the zone. That's actually insane. Okay. Yeah, exactly. Which is why maybe a 7-1 or 6-6 open would have been a bit better. A 7-1 open would have given us a way better odd of clearing 9998 and 7K. But also these were the 88-point ratios that we talked about yesterday too, from the opening range, if you forgot, like close to here. And then off lows, I'm pretty sure we said that these were core areas, right? Like the 107, 110, 115.25 or whatever. 115 points is like max core areas, 115.25, 115.5. So there's still core ratios. Do you see it? So this is a core ratio. This is like the 107, 110, 115, okay? 115.25 is also 1/3 of 346 points, which is another interesting observation here. And 68.87 is 173 points off last week's lows, which is half of 346. So basically they stalled 1/3 of 346 and they entered like the half range off last week's lows off 69.87. So if you go back and look at that and read the report. Okay. This is also a 64-point hold here. Remember how we said we wanted to ideally hold these areas here? And this is an 88-point hold here off 69.02. And this is a 173-point break here at 9.6886.987. So these areas are definitely calculated spots, especially off the low range. The overall range has been like 181 points. I also noticed too that off the open close from last week, they're hitting that 151 point ratio. So this is another way that had they pushed and expanded, do you see how that 173 is close to that 7012? So same thing, if they had opened just a little bit higher today, I think we could have had some better odds. Like this is probably 107 points off today's open. Okay. Do you see that? That's how you would have had better odds of getting maybe 70-14, 70-19, 70-20, whatever the case is. And then off of the actual lows that occurred, we basically stalled 116 points. But had they kept expanding and pushing, the 128 to 132 point ratios, same thing. It would have been that 70-10, 70-14. I already talked about all of this yesterday, so I'm not going to go into too much detail about it because we already looked at it and it's on the report. But it's the same idea. Like these would have been the same thing. And I do think if they had opened a bit higher, then we would have had those odds. And if they had opened a tiny bit higher, we could have even had odds of getting those core ratios too. Or core ranges, not ratios, sorry. So I think it could end up being a pinnable close just because, as you can see, like this spot in here is super calculated, especially off like where they held back here. So this is definitely enough to be considered a max range. That's why I was telling you guys earlier, like this could break to those neutral spots and maybe core areas if they're able to clear 6998, 6999 before 3. Okay, so that was the condition, and that's why, because this area is such a huge overhead. So not clearing here before 3 p.m. implied reductions and staying stuck since 6995.50 is extremely calculated. And then off of today's actual real-time open, these are also the same thing as the 33, 34 point breaks. Okay. And they did break it just slightly. Remember how we said last week we had those reductions coming into play, like the 2.75? Do you guys see it? This is the same thing that happened here this morning off open, which would be the same thing as like if they had broke this range, then we would have had odds of getting that 42 point interval. Okay. Closer to 7,000. Do you see it? So the 7,000 range is also the same thing as hitting that 42.5 point to 44 point range off open. So there's a lot of constraints around basically this area here. Any questions, or is that pretty straightforward for you guys? Gold is getting a pretty good ramp here into the close. I want to see if XOM would hold off this 134.85. I think so too, especially since last night was, like, these were really good holds. Like, especially of the channel. How did I delete the channel here? Like, the channel holding here, like, this was pretty straightforward. And then getting that structure break above 4.9. And we talked about this yesterday too. Like we said, if we end up holding, it has to hold right away. Like you can't afford to get back any lower. And that was when we did, I have to refresh my memory, but I'm pretty sure. Here, let me just take this back here. Let's just look at here. Didn't we say, okay, yes, like this is ideal, right? You don't really want to go beneath that, but if they hold, that same range differential, that 135, 136 point ratio would take us back to 7014 retest. And that was if you hold above these areas here. So, and that means holding the lows, and it means getting that 66 point break. So this is why opening closer to like 6970 would have been a little bit better for us. This was the case if they brought it down and then limited range back to 6932. Those are the scenarios. I gave you guys every scenario, but basically holding 6870, 6878 is the same thing as holding the 44-point ratios off 6904. And breaking 6948 is breaking the top of the channel, which gives a lot of confluence in this area here. Okay, so just go back and study this, because essentially the 6953 to 59, it's not a bad area, but it's not the best area. Does that make sense? This area here would have been a little bit better. And I even said it too, that the area that gives you like the 44-point offsets are going to give you the best odds. So above 6948, so 6933.75. Basically where they open is like 22 points off Friday's close. So had they opened closer to like 6.7, that would have been 34 points. Had they opened closer to like 7.1, 7.4, that would have been the 44-point ratio. So you would have had way better odds in terms of a clearance break. Whereas like 6904 plus 66 is, yeah, that is 6970. So they opened it closer to the 55 points that we talked about. We did talk about that. Didn't we talk about that? How we said that where they opened this and gapped it down and closed it, wasn't this 55.5 points? And what we said is basically if they hold 55.5 points, they could do the same thing on the upside. So if they open at 6904 and they did the exact same thing on the upside, let me just make sure this is measured right from close. 69. Where did they close? 693375. And they hit here, so 79. We talked about this yesterday, but let me just refresh your memory. So off Friday's weekly close and then this week's weekly open, we said that if they end up holding that range, then they might work in those weird intervals. I'm trying to remember where we talked about it. Okay, yes. That's what we said. Okay? That's crazy. That actually played out. Okay? So basically they're moving it in these types of ratios, which they're not the best ratios, but they can help. Okay? So and this can help us have an idea of like what they're working with. So basically we had odds of opening closer to this area here. Okay? And like around here, based on where they open close. This is an open close ratio, okay? For session OR to real-time OR, study that too. And I actually haven't looked at it on the upside, but this is pretty cool because if you look at like the real-time open back here, you can see that there was a tiny reduction too. Okay, and like you can see where they hit the highs here. That's about the range of where they open. And the really cool thing is 6902.75 was our calculated area from last week, this area here. So I noticed that that's basically the same differential. This kind of open where they open today is basically the same thing as that 6902 area holding. Kind of like this range in here. And they might have done that based on this structural hold right here too, like from overnight back here, which I found was really interesting. But anyway, I hope this helps you guys see this in a different way, from like open to close, high to low. I think it's important, but it seems like the market's moving in these kinds of ranges this week. So the big areas of overhead are for sure going to be these neutral zones. And it makes sense because these were also the 132, 134 point ratios. Okay, do you see it? That's actually insane. So that concludes the same exact thing that we looked at with those 135 points. These here. Where did I post this? Not this. This. Isn't that crazy? So highs to lows are directly correlated to open and close based on these ratios. So maybe that's what we could look for. There's going to be a lot of overhead basically around this 70 12, 70 10, 70 14 area where basically the neutral zone. And then if they were to expand or extend, let's see what levels we get. Hold on. I bet anything these areas should link us back to our previous all-time highs. This should actually be 135.5. So let me just fix this. And let's see what levels this gets us. I would be shocked if this doesn't equate back to all-time highs. It should. Like these areas here. Okay. And off the actual range, so 6904. They have to basically align with our 7039, 7041 targets. Okay, so that 1.75 differential that we have, especially like you could see it based on where they opened, that could be the reason why they don't give us, and that's the same thing as us not opening at 6906. Because remember how 6906 was linked to 7041? Do you guys remember that? So that little reduction here, that makes total sense though, because that's probably why they opened at 6957 versus this 559 or 58 spot. Okay, like this 1 point. That makes sense. That's probably the same differential up here. Okay. So this should give us a really good idea of like where our big spots could be. And if they did trigger a core to core off this core hold here, maybe we'd look for that 7057. And we did say that the 7050s have a lot of confluence. So this would be off our 2-1. Let me just move this. Off that 2-1 hold. And same thing with like our 2-4, 2-6. They should be around that 60. So like these areas are more linked to the means. And then once you clear 3-2, 3-3, that's when you can get 70-69, 70-70, 70-71. I don't know if they'll give us those full core ranges this week, but considering we hit the zone as early as now, there's a decent probability. And then if they give us like a full break off where they actually opened, which is that 69.57, 58, and then where there's that calculated range off 5.875, those areas would be equated to this 70, 92, 94. So that's basically linked with a new zone. So this area here on like 132, 133 point break is like off 69, 57, 58 is basically linked to entering a new zone. Okay. Whereas had they broke closer to 6966, these areas would have been linked closer to hitting 7100. Do you see it? So I think the thing that stands out the most this week though is that these areas here off the weekly open is linked to the all-time high. That's actually insane. So the 6904 area is linked directly to here. Which would be basically a retest of all-time highs. That's very interesting. And that 173 off these lows should be linked to that 7052, because we did say that these 7050s are going to be very big spots for us these upcoming weeks. Okay. I think that's a pretty good recap. Like, it seems like there's a very good correlation with highs, lows to open close. And my thoughts would be that really all we really have to do is basically probably pin core areas, because they could just keep it now kind of core bound since these areas are more linked with that. So based on where they held. And you can see like this reduction stick breaking 6988 and 87 into the close. This was pretty obvious that they would probably keep it closer to these very calculated ranges around like 669, 7950, 697,925 that we highlighted yesterday. Do you see that? And off of today's open, these are probably those 21, 22 point ratios. Yeah, they are. Because today's open was 5.7, right? 0.5 or something. So they basically closed us 21.75 to 22 points beneath. That opening range. I just want to see the overall range from the open, 76.75. That's a core ratio then we talked about. So overnight conditions, let's set them now. Probably just need us to, I would say, sustain above 6966 ideally, since heading back to 5.1, 5.2, 5.8 could basically reset the volatility. But if our goal is to be in the zone before Fed release, then we probably need to digest, because they never really digested core areas in real time today. Do you guys agree? Like, I don't really see that there was much digestion that took place in between here. Like just a little bit, but not really. So, and we probably could afford back to even 5.8 if they really wanted to. But maybe like just this area overnight. I think holding above 6671 would be best for odds, but they can afford it only because we have so much time now, since they definitely didn't have to get to the zone today. That was a little bit early for market to do that. And the goal for the 27th is obviously going to be to test these areas here, especially ahead of Fed. Because the issue with Fed last time is they never tested 70, 22, 28, and 32 before release. They tested it during CPI. So we want to be above these ranges here before Fed releases their statements on Wednesday. And then in terms of structure now, 2-day is no longer stuck in an inside bar since it broke. My only concern with this is it could make a massive star, which is another reason why maybe it would have been a bit better to close above the zone, like above 8.8, 8.7. Okay, it's not bad, but we just need follow through then. 4-day never engulfed. This already flips over tomorrow, but it almost fully negated. I think that's more than usually. If you can retrace at least like 88% is usually the threshold, then you typically have good odds of continuation. So like the 88, 89, it's like 88.5, but whatever, you could just put 89. Do you guys see that? That's basically half of 75 and 100. That's pretty interesting too, that it's exactly that spot. So what is the 88.5? 9475. That's really cool. Okay, and then 5 days still stuck in an inside range till end of month, which obviously that can change depending on what happens. And our only structures that still have odds of engulfing is the 6-day, which doesn't flip until the 29th, so there's still odds for this to retest all-time highs as early as tomorrow. Can someone write that in the chat, please? We could retest all-time highs as early as tomorrow. Considering we enter the zone as early as today, those odds definitely increased for us. And then the 7 days could be another one again that's stuck until month end. 14-day flips over tomorrow, which obviously didn't engulf or close over these structures, so kind of like an invalidated flag. And then the 17-day bull flag still can have continuation. And this one includes the 27th, so this includes tomorrow. Okay. Okay, so we'll see where they end up closing this. Silver ended up coming right back. I'm assuming gold did too. I kind of would want to see like some of the miners maybe just take a little bit of a relief over the next day. And then maybe give some steam for the index and like mega cap tech to start moving instead. Where's my PLG chart? PLG, I know we covered this, but it tagged exactly that 410 spot. Okay, so I'll cover. This is the last one I want to cover before I sign off here. For anyone that took this swing, this is playing out really nicely, especially on these structure breaks. Like you can kind of see these really good range breaks, especially through real time this morning off that 350, 353. Do you guys see that? And these structural holds on Friday into the close. Like this was a really good clearance break and tag of 410. So they still triggered that 75% range. So that could still set up some odds for continuation, but I do want them back over like that 340, 341 spot. And kind of can see here, like there's going to be a lot of overhead off of here. And this is off the yearly open basically, okay? So for measuring those intervals off that yearly open, okay, off yearly open, there's going to be a lot of overhead off, where do they open the year? 245. So there's a lot of overhead around 408. I don't know if Eddie's around, whoever was trading this. This is why another reason why I marked this overhead. And then that 248, you see 411. So, and they did test that today. So that's a very, very, very calculated spot off yearly open, just as an FYI. Okay, so let me just calculate it off of yearly opening day highs. So that being said, oops, why isn't it letting me capture that? Oh. This is also how we captured this, like the 356, 353. Okay, is off these ranges here. And then this, I didn't mark these areas, but the 227 would be 335 or so. So definitely an area that it needs to try sustaining structure here for continuation. Otherwise, it would be at risk of basically coming back to, I would say, half this range, which half of that would be like the 54 mark. Okay, which you don't want it to go too much lower, because I think that would be basically testing off 53. that would essentially be testing these areas here, okay? This is basically the 50% of the range. Off these areas here. This is off 5-7. So this is really interesting too, because half the range is like this 401, and that's where it opened. So yeah, this really has to basically clear that 411 spot. Set some alerts on this, guys, because if this clears that area, that's, I would definitely say that we could measure that same thing, that 108 that we had measured. So 439. I just want to see where I had that. 299, 390, 299. Because I forgot where I initially had that measured from. So I wonder. Oh wow, that's insane. Look at that. That's crazy. So off these areas here, do you guys see that? Can you see this? That's like 107. That's insane. Look at that, 297 to these highs. That's what were the highs today? 404 open. They actually did hit 411 though, but that is pretty wild because our ratios are basically $1.08. So I think that could be part of the reason why it didn't continue. Okay, so 404. So this had to basically maybe open above 405. That's really cool. So, because these are the ratios I'm using for this one. So 405 would have been a calculated open. So they failed to open 1 point above, but then they broke 1 point above over that 410 to 411. So that's a really interesting way of looking at this then. And I think basically what that means is when and if they do come back and break, you can mark the 439 if you want, and the 455 as like some midpoint overheads. But basically it means that these would be some calculated spots above if they had a continuation run or something, and these would be above the 410, 411 spots, like the $1.08 ratios, which is basically the same thing as the 163 above yearly opening range yearly. That's really cool. That's pretty insane, like those differentials. I don't remember where I got it from. I'd have to go back and check, but we talked about it last week. But these wouldn't be some bad areas to mark now that we can confirm that those areas are definitely correct. You can definitely mark this. I think like 570, between 574 and 576, like these areas here. Like above the 410 and that 519. So those would be our bigger targets, I think, once they come back and clear this area. But that 410, 411 is insane that we had that calculated. That's crazy. So 410, 411, extremely calculated. Okay, set alerts. That breaks. It should trigger 5 519 to 575, okay? Those would be the next targets. Let me just set alerts now so I don't forget, because maybe we'll have some time this week to come back and repurchase. There's like definitely overhead in between around like 464, 480, but the bigger targets are definitely going to be that 519, 512 spot. And then maybe the bigger break to 575, 574. Anyway, this from like, if this actually triggers from alerts last week when I posted this, like that's a 100% move. Because we talked about this on Wednesday last week. That's a huge move so far. So, and it's working pretty nicely. I know we said it could get all the way to 8. And like these 750 marks, but I wonder if these calculated areas would net around there too. Yeah, they do. Or pretty freaking close to it. So what about off the $8? Does that net the same? Yeah, it does. Wow, that's crazy. So off that 480, it nets close to 480. And off that 5. What is this spot here? Yeah, 574.75. That would net like close to those. $685 would be like some midpoints. Okay. Mark that 685 spot. Close to like 685.86. Because that would be that range break off here, like the $8. And if we measure that 163 off there, it's pretty close to that target we had above. I know we said our target was like 850 or something like that, but I mean, it's pretty close. Like these areas here. What area is that? 860? Okay, so 830, what is it? Basically 850. And that's breaking off that 3-month flag. Oh, that's where I got them off of. These were the ranges off the 3-month flag. And I did say that if you're not really someone that works well with ranges, you could just apply a fib extension. Like if you're not really someone that does good with these sorts of things, but then you're going to have to be really good at basically tracking it. So, and maybe it might not be as accurate, you know what I mean? Like this is 407, 415. It's not that bad. Like that's pretty close. 478, 486. Do you see what I mean? 522, 514. Like it is pretty close, but if you want the exact ratios, then you could just incorporate that. But technically, if you want to use these, you could. They're not that far off. They're like 5 cents off, I think. Or so. Yeah, like 486 versus 480. Okay, guys, I'm going to shut off the stream and I'll see you guys later tonight. And I plan on